So back at the beginning of the pandemic, back when the lockdowns were just beginning to be discussed as a possibility, I made the prediction that if that happened, that inflation was going to soar coming out of that, coming out of the lockdowns. And the reason I said that, and this was before I knew about any of the stimulus money or anything else that the government ended up doing to exacerbate the situation. But there's a component of inflation that I think people are missing that is real, that is present, and is not going to go anywhere anytime in the near future. So stick around, I'll talk about that. Hey everybody, I'm Don Owen, and this is DFY Informed. Thank you for tuning in. Real quick, when the lockdowns began, I said that I actually put a post on Facebook indicating that I thought inflation was just going to run rampant coming out of the pandemic. And again, this was back before there was any real talk of stimulus money or paycheck protection program or the rent moratoriums, anything like that. So if I was already talking about inflation, what was I thinking about in terms of the lockdowns themselves and what that would do to future pricing after all the dust had settled? And the concept I was thinking about was what you could think of as a risk premium. Now, what is a risk premium? Just a simple analogy or simple example of risk premium. Let's say that you're going to borrow the money for a new car, and let's say that your credit score is really low. Let's say in the 600s or maybe even lower. Maybe you've had some bad debt in the past, or you've had a foreclosure or something. Anyway, your credit score is really low. The interest rate that you're going to get, provided you're able to get a loan at all for your car, is going to be at a much higher rate than somebody with a credit score, say, in the high 700s, low 800s. And the reason why that is because the lender is going to impose what's called a risk premium on your loan. And so in order to protect themselves against default, that is a higher risk with people with lower credit scores, they charge higher interest rates because they have to pad essentially for those people who will ultimately default. Well, the same's true in business now. I mean, think about it. If you were the owner of a small business, say a restaurant or a clothing store or anything that was deemed by the state or federal government as a non-essential business during the pandemic, you got shut down. If you were a landlord, you might not have been getting rent because your tenants were forgiven and there was no recourse to evict at that time. So you basically ate the cost. Even businesses, small businesses that had business interruption insurance, those business interruption insurance policies don't cover or didn't cover the pandemic itself or the lockdowns associated with the pandemic. So those are typically set up for things like fires and floods and other sources of business interruption, but not the pandemic itself. So in the absence of any sort of protection going forward, and now that the government has shown its willingness to shut companies down at their whim, basically they get to decide who is essential and who isn't, business owners are going to have to, if they're not consciously doing it, they have to be almost subconsciously doing it, imposing now a risk premium on their future pricing. Meaning they're going to have to make enough money on existing sales while they're allowed to be open to account for and potentially protect against the possibility of another shutdown. And by the way, folks, I think that now that the government has wielded that tool as a as a means of controlling for whatever. If it's not a virus, it's going to be climate related or something else. They'll find a reason. But in essence, they've shown the ability that they can tell people to shut down, and people are going to have to do it. And if not, they're threatened with lawsuits or being arrested or having their bank assets frozen, you name it. So this new pad in profit, if you will, going forward, is a real component of inflation. It's something that did not exist in the days prior to the pandemic, and it is certainly going to be around, I think, for at least until the memory of the last lockdown kind of leaves people's minds, and maybe people get to a level of comfort again, thinking that it may not occur. But anyway, that was a component of inflation that, like I said, I think is real, that I think is around, and I don't think anybody was talking about. And the other thing about it is when you threw on the unneeded stimulus money, the eviction moratoriums, and all of these other giveaway programs that the government instituted, it just was adding fuel to the inflation fire, which is why that we're seeing prices on everyday goods and services up 30, 40, 50% in some cases. And I know the official inflation rate is around 10% or whatever, but we as consumers certainly know that we're experiencing much, much higher rates than that. Anyway, those are my words for today, and thank you for watching. And if you got any comments, please leave them below. If you want to subscribe to the channel, please feel free to do so. Not pressuring you. I don't take any revenue off of YouTube anyway, but hope you enjoyed listening. Thanks a lot. Have a great week.